It's the ultimate balancing act, the Reserve Bank's decision over whether interest rates should rise or fall or stay as they are. And every time the balance swings one way or the other, some people are given more in their pocket, others lose out. Helen Wellings reports.
For retirees and older Australians relying on term deposits for their income, this is going to be a major slug for them.
The Reserve Bank's 0.25% interest rate cut on home mortgages is a much-needed Christmas bonus for families. But the cruel flip side, it will absolutely throttle self-funded retirees, pensioners and those living off term deposit investments. Peter Schwitzer, chairman of Schwitzer Financial Planning,
87,
says the incomes of more than 1 million people in that category will take a serious drop.
So as mortgage rates come down, the loss to the banks, in a sense, are made up by bringing down the deposit rate for those people who rely on term deposits for their investment income. And that means, effectively, they are being slugged. They are copying a lower income to live off.
An interest rate drop on bank investments from, say, 5% to 4% means 1/5 of an income from interest is lost.
You know, we thought retirement was going to be great. We just didn't have to worry about anything in particular, but it's not working out.
Kathy and Peter Delamere are retirees living on their savings investments, plus a $250 a week pension. With mortgage interest rate cuts, over the past 18 months, their bank's term deposit rate has dropped a massive 1.75%. A quarter of their interest earned wiped out.
Where we had the cake and the cream on top, now we're starting to eat into the cake.
Well, certainly self-funded retirees rely on interest to fund their existence and pay bills. And, you know, when interest rates go down, they're impacted and they don't like that.
John Simons, Executive Chairman of Aussie Home Loans, says elderly retirees and pensioners will have to prepare themselves for further interest rate drops needed for our economy.
Unfortunately, you can never ever satisfy everybody, and in this case, with lower interest rates, it does impact on the self-funded retirees. But look, overall, it's a better result for Australia and it's helping more people.
That's if and when the banks decide to drop the latest lending rate cuts. So far, only ING Direct has passed on the full interest rate cut of 0.25%. Bank of Queensland, NAB, Westpac and the Commonwealth by 0.2%. ANZ will consider its on the 14th of December.
Since 2008, lots of families with a $400,000 mortgage have paid $10,000 extra because the banks haven't passed on rate cuts in full. That is a big hit to family budgets.
Lachlan Harris of One Big Switch is urging Australians to swap lenders if their interest rates aren't lowered to the RBA's cut.
What it means is you're paying about $300 to $350 a month extra every single month.
The other sting for struggling Australian families, as soon as interest rates go down, insurance premiums go up. And that's for the full gamut. Price hikes on home, car, income protection and life insurance.
Insurance companies go for very safe investments. So when interest rates come down for fixed deposits and things like that, they're losing income. So the way they make it up is by raising premiums.
The best interest rates for the top 5 bonus savings accounts, conditional on monthly deposits and no withdrawals. RAMS 4.37% up to 5.17. Bank of Queensland 5.01. Easy Street Financial Services 5.01, Hunter United Credit Union 5.01, FCCS Credit Union 2% up to 5% with deposits of $50 a month, no withdrawals.
But you have to pick up the phone, come to One Big Switch or go to another home loan expert and try and get a better offer and use it to get the banks to compete for your business.
Yeah, a lot of information to process in that story. If you want more, head to our website.